Midweek stock market update, everybody, and here we go. As we come to the end of the year, it's been a phenomenal year for pensions, and I'll give you the update on how my pension's done this year in a future broadcast, so like and follow. But for now, let's just look at price earnings ratios. This is share price as a multiple for every dollar of expected future profits, and you can see red is expensive. You're paying $42 for Amazon for every future expected dollar. Now, it could be that the market's wrong. It could be that valuation is not the only thing we look at. So that's two things we've got to bear in mind. But we're going to keep a special eye on energy and banks going into 2024, and probably drug manufacturers in particular as well, because they're relatively cheap, and regional banks. So keep an eye out for those in future broadcasts as well. Now, for the moment, what do we have? Well, remember, with all of this, I look at not just the charts and the data, but I look at the valuation, the revenue growth for 10,000 companies, cash return capital on capital invested, momentum, Sortino and Alpha, those first 5 columns, and then go down 10,000 equities. So where are we at the moment? Well, over the past week, Alphabet had a good week. So did Tesla. In fact, some of the most overvalued stocks as well as the most undervalued, which may make you think that valuation is irrelevant, but it's not. It just proves that there's more than one factor. Value is not the only factor. Growth, momentum, cash flow are all relevant to future stock price moves, which is why we need to tick every single one of those boxes. How about the exchange traded funds, folks? Well, if I move myself out of the way, what you can see with the exchange traded funds, and I've done a separate video on my YouTube channel on these, go to alpeshpatel.com/links to see if any are of interest, and I'll continue doing probably monthly broadcasts going through not every single one of these ETFs, but some of the key performers. And what I've got as another video coming up on my Telegram channel and on my YouTube is I've gone through some of the best performers and then the stocks which comprise within them to see what's driving growth and if there's any stocks worth looking at. Where are we year to date? 55% up. Yeah, 55% up on the NASDAQ. So sack your IFAs. S&P 500 up 25%. You'll see what we've done because people have asked, oh, what have you done? Actually, I should say only 2 people asked on TikTok. And so we've prepared that. But it's December the 28th as I broadcast this. So I'll show it tonight just in case there's a market crash and all of a sudden we haven't done as well as we thought we did. The UK markets were fairly flat at 12%. Which most, I think 99% of UK funds didn't even match the 12%. Top 10 stocks. None of these are in my portfolio, and I don't plan any of them to be because this is momentum only and over the past 12 months. Over the past month. So I've just put it here out of interest to show you, and similarly with the UK ones, but they're not in my portfolio. And the reason for that is maybe some of them have flown up and they're about to flow back down. I've done a video on these on my YouTube, on these ones as well, and on my Telegram. So you've got to keep up with me on all these sources. Now, S&P 500, where are we on that? Well, that still looks good. This is going to probably come off. The stochastic is going to come off, okay, a little bit. And so you might get something of a pullback. Maybe it's going to be today. Maybe it's going to be Friday. Maybe it's going to be next week and the first week of 2024. The monthly MACD is probably the most important indicator as far as I'm concerned, but it's also the slowest. I don't use this the way the textbooks do. The weekly is continuing upwards, which is very positive. If the monthly was upwards, that would also be very positive. If it's sideways, it's slightly an amber warning. It's a double amber if it's falling, and it's a red, i.e. bloody exit, if it's below its own signal line, as it was here. Anytime it does this, I definitely don't want to be in the markets, or if it's even going sideways after falling beneath. And the earliest I'd think about getting in would be around here. Now, you might say, well, that's a bit bloody late, mate, because you should have got in all the way over there. Well, actually, we did have some picks from when it started going flat in January 2023, but that later point is where you feel the most comfortable. But if you get in here, you know you might take a bit of a move down. Anyway, as things stand at the moment, relatively positive. No action needed on my portfolio. The FTSE, maybe it'll do this, so maybe it'll come back a little bit. Anyway, from what I recall, it's at, 2018 level. So well done. For 5 years, you've not managed any of the CEOs of the FTSE 100 companies as a sum total aggregate of individuals, have not managed to do the one thing they're hired to do, which is add shareholder value. You might say, well, that's not what they're hired for. They're hired to keep track of health and safety and not get into trouble for sexual misconduct. Well, they didn't even do that very well, did they? So Apple, where are we on that? Now, remember, I've got to narrow those decisions down. Buy, hold, or sell. Well, we're certainly not selling. I continue holding what I've got. Would I buy more right now? Well, I'd rather that wasn't going sideways or it's going upwards. So at the moment, I'm going to stick with hold on that one. We'll call that the Apple strategy, okay? If you did put a gun to my head and said, what should I do right now? Then I would buy more. But we'll call that the Apple strategy, which is also being deployed on Alphabet, which is also being deployed on Microsoft and on Amazon. In fact, in Amazon, I'm even more bullish, but there we go. That's where we are at the moment. So for the moment, all hunky-dory and good. What about Disney, which was a special situation, slightly higher risk? You see it's again dragging along here for ages. That's the projection. Well, it's just a wait and see game. We didn't just want to have tech. We wanted to have a look at things outside of it. Nvidia, look at that. That is overbought. My fear is it does what it did here, which is it has this wonderful rise and then you don't keep any of your money. Imagine you were in a fund which you saw rise lots and lots, and so you got in here only to discover that the fund manager held it all the way down because you can't go fully 100% to cash in all their holdings, and you managed to lose half your money as a result. Not very good, is it? That's why we don't like fund managers. And we want to avoid that for ourselves. How do we avoid it? Well, we just say Nvidia strategy is if it drops X%, you will sell Y%, and you can solve that for X1 and Y1, X2 and Y2. It's that simple. It is that simple. And that will ensure if it continues going up, you keep in, and if it falls, you protect the gains you've already got and don't hold it all the way down. Very simple, isn't it? It is indeed, Alpesh. Okay, Tesla, we exited that. That was a January special situation. It wasn't the approved filtered list because it was a bit on the expensive, it was a bit on the expensive and volatile side, but it was a special situation, therefore, which are the ones outside my approved filtered list. If you're not on the Great Investments Program, email me. And when we got out here, which in hindsight we shouldn't have done because it continued going upwards, but that's fine. Might become a special situation again next week in January. I'll see. I'll post it on my Telegram if it does. But it looks all fine as if it's going to go up. So those of you held on, well done, congratulations. We only made ourselves, I don't know, 150%. If we held on, we would have made more. Meta has been a great one as well. We got in late, as you know, in January. Well, I say late. There was no way we were going to be able to bottom pick that market or willing to, because this was still falling. And if it's falling, as I said, I don't get in. The earliest I'd get in is when it starts rising. And so we got in January. If you look at my Telegram, you'll see that. And some of you might say, well, that's a bit bloody late. Why didn't you get in here? Too high risk. Anyway, so we didn't get in right at the bottom, but it's been fine. It's done this. And we use the Nvidia strategy with Meta as well. Okay. ServiceNow, Apple strategy with that, and Nvidia strategy. So hold what I continuously hold, what I continue to hold, and then if it drops X, sell Y. Simple as that. Now, Cisco did fall off a cliff, and now it's resuming upwards again. So remember with these, this is not to say go buy it now. This is not what this is. This is me giving you a market update of some of the bellwether stocks and what's out there. It is for information only. What would I do with this? If you put a gun to my head, would I buy more? No, I continue holding what I've got, and that's it. Okay, so I'll try and make things as clear as possible. Netflix is not one I own. It just happens to be very popular, and I think it'll do this direction. What would I do with this? Would I buy it now? No, because it's not one I hold anyway. Would I continue holding it if I had bought it? Yes, because if I'd bought it, I'm sitting on a big gain. I'd probably just use the Nvidia strategy. But like I said, I won't buy it now. It is just to give you a flavor of what's going on in the broader market. Now, don't forget, have a look at campaignforamillion.com, and if you're interested in my Great Investments Program to sort out your pensions for 2024, and remember, we go through the approved filtered list. We make your life very easy. So you select your own portfolio from the data we give you, which ticks the value, growth, income, cash flow, Sortino, alpha boxes. And then all that's left for you to do, is monitor that for 5 to 10 minutes a week. You get unlimited access to me as well on phone calls. And it's not subscription based. And we think it's going to be world changing. We've got clients everywhere from New Zealand to, of course, the UK, all the way up to Canada. So we're pretty much covering the whole globe of clients because they've been let down by their IFAs, their wealth managers, the pension fund managers. And the most telling thing is when you point out to them that the NASDAQ was up 55%, but their pension was not even up by 25% this year. I think that just shows what the problem is. Okay, so have a look at that. Thank you very much.